As I said, we are going to start. They will join us later. I think today I'm going to start with. All right, let me just start with my pair, which is gold. All right, let me start with gold. I hope the screen is visible, right?
Visible, sim.
All right. All right, so this is good. This is the higher time frame, which is the 1 day time frame, which is the time frame I use to analyze any of my trades. All right, so as you can see, price tapping from this order block, which is here. So price tapping from this order block, and this shows a straight move to the upside, and this shows this straight move to the upside. All right, so after that, we can see that we have, I think we have something here. I think a break or structure. All right, it's not a break or structure, it's weak rejection break. Allow us to move to our 4 hours time frame. All right, in the 4 hour time frame, we can see an internal break or structure. All right, so price tap in from that internal break or structure. Price fade to create, give us a higher high here. I don't think we have a higher high here. So right, so it's just a weak rejection break. We also have this internal break or structure, which is here, in which price also tapping from this order block, which is here. All right, so price tapping from that order block, and this shows a move. All right, so I want us to move to our 2 hours time frame. All right, so in our 2 hour time frame, if we can see, let's just read the recent movement. As I said, here is a weak rejection break, and it's not a break or structure. All right, it's not a break or structure. And price tapping from here. We also have this other block, which is here, in which this break or structure to the upside. All right, so we also have this other block which causes the break or structure to the upside. All right, so that is the other block that causes the break or structure to the upside. All right, so we are having this liquidity in which price is targeting this high. Is the liquidity in which price is currently like targeting, because price is moving to the upside at this spot, and this is the liquidity in which price is targeting to take from this side is the liquidity. All right, is the liquidity. So allow us to move to our 2 hours time frame, sorry, 1 hour time frame. All right, so in our 1 hour time frame, as you can see, we have this break or structure is to the upside, and we have this internal break or structure, and this internal break or structure, price reacted from this other block that causes the internal break or structure. Now this is a clear liquidity sweep. All right, so market take out liquidity from here. It's a liquidity sweep when tapping to this key zone, which is here, to this shows this little move. All right, price is currently like targeting to the next liquidity zone, which is this liquidity zone. This is where price is currently like targeting to. All right, price is targeting at that spot. Now allow us to move to the 45-minute time frame. All right, in 45-minute time frame, we have the order block here. Price do not eventually mitigate the order block here in a 45-minute time frame. All right, so allow us to also move to our 30-minute time frame. So price mitigates the order block in our 30-minute time frame. Allow us to move to our 15-minute time frame. All right, so in the 15-minute time frame, we have two order blocks in which price do not mitigate. We have this order block which is sitting here, and we also have this other block which is sitting here. All right, so have this other block which is sitting here. Now I want to understand something. I want us to really understand something pertaining to the chart. All right. So this is a key supply zone in which price is the market not tapping from this other block that causes supply zone. And if we can also watch, we have a market structure shift from here, even though the price is bullish. So we have this market structure shifts from here, right? So have this market structure shift from here at this point. Now, price hasn't reacted from this other block. We may have a sell from this zone to sweep out liquidity from here, because I know people will be looking for a buy at this spot. People will be looking for a buy at this spot. And since price is heading to the supply zone, price may take out the liquidity at this spot. So price may take out liquidity. All right, so as I said, we have a market structure shift at this spot. Price reacted from this zone here, and this is supply zone which is here. So this is supply zone, and some people will be looking to sell at this spot. All right, some people will be looking to sell at this spot. So price may react from the supply zone and give us a sell to the downside. All right, so me eventually now pertaining to this movement here, we wait for price to dish us a clear movement. I'll wait for price to dish us a clear movement. All right, so if price could break structure to the upside here, all right, if price could give us a break or structure to the upside, we find the other block move price to the upside. All right, and if price do not give us a break or structure, all right, price do not give us a break or structure, like price reacted from this supply zone which is here and give us a sell, we look for the recent break or structure which is being confirmed that we are in a downtrend. All right, which is being confirmed that we are in a downtrend. We find the other block and move price to the downside. All right, so these are two possible setups I want you to understand. All right, we wait for the market to give us the movement. If the market gives us the movement, then we trade with the movement. So this is my own view pertaining to gold, right? This is my own view pertaining to gold. Now, the next setup we are going to analyze is going to be, I think we are going to analyze Euro JPY, right? So let's analyze Euro JPY. All right, so I'll allow us to move to the higher time frame bias, which is the daily time frame. Let's understand what the market is like currently telling us, because it's very much important. It's very much important for us to understand the direction from the higher time frame bias. All right, from the direction in the higher time frame bias, what I'm currently seeing here is that price give us a market structure shift from this higher low. All right, we have a market structure shift from this higher low at this spot, a market structure shift, and we also have this other block which is currently like sitting here in the higher time frame bias. So all what we are looking for from this point is a sell. All right, so it's a sell to the downside, unless the market give us a market structure shift to the upside. So I would rather look for a sell than to look for a buy at this point. So I would love us to also go to the 2 hours time frame. Let's understand what the market is saying. All right, so in the 2 hours time frame, if I could also break this, then we have a market structure shift from here. We have a break or structure to the downside. We have a break or structure to the downside. We have a break or structure to the downside. Right, you have this break or structure to the downside. You have this break or structure to the downside. And after our price is reacting from this zone and using this zone as resistance zone. Using this zone as our resistance zone. All right, so I would love us to move to the 1 hour time frame. All right, so in the 1 hour time frame, as I said, price is using there as resistance zone. All right, although price is not tapping from this order block in the 1 hour time frame, price did not. All right, but price is currently using here as a resistance zone. So allow us to move to 45-minute time frame. All right, so in a 45-minute time frame, we also see that price is a break of structure to the downside, right? This is a break of structure. Price also missed out from this order block. Price reacted from this order block, which is here, which I may call as a stumbling block, because if not a stumbling block, price could react from this order block and this shows a nice set to the downside, because people will be looking to sell other spots. All right, but price reacted from a stumbling block from here, rising from this stumbling block, and this shows a sell to the downside. So, and after that, we also have this move. Based on my strategy, that other block is still valid, right? After this set to the downside. But we also have what we call inducement order block, right? We also have what we call inducement order block, which is this order block. Price created this inducement order block. But you can see how price also reacted from that inducement order block and also give us a sell to the downside. All right, you can see it after reaction from there, because this other block sitting here is also valid to give us a sell to the downside. Since price do not touch in from that other block almost 3 times, I will remove my points of interest from that other block, because it's now low probability. It's now low probability because the first touch didn't get there, the second touch didn't get there, and even the third touch didn't even get to that zone. All right, so I'm going to use there as there is going to be in low probability. It's very low probability right now, so we cannot trade from that zone. If we trade from that zone, we will be liquidated. All right, we expect the first touch or the second price to touch us, either the first touch or the second touch, but price do not touch us on the first, second, and also the third. All right, so I'll move to the 15-minute time frame. All right, this is the 15-minute time frame. As I said, this is the order block here. Price does not get into that order block to give us a set to the downside. What we saw is this: we have the first point in which price reacted from here, and this shows a set to the downside. We also have the first touch prioritizing to premium pricing arrays, prioritizing to premium pricing arrays, which is this first premium arrays and this second premium arrays. All right, it's better for me to take trade from this second premium pricing arrays than the first premium pricing arrays. But what price is to tap in from the first premium pricing arrays and not reacting from the second premium pricing arrays. But now, this premium pricing arrays also serve as what we call engineered liquidity. All right, because it's there to induce you. You can see that price supposed to like fill out this other block, but price didn't fill that other block at that spot. Price returned back from this engineered liquidity. All right, now our price has returned back to that liquidity zone. We also have this point is also valid as our point of interest, as our POI. But price did not get there to give us a set to the downside. What price did? Price reacted from here, and this shows a set to the downside. So this makes this zone right now, this zone here, less probability for us to take a trade, because the next price that will come there is going to take out liquidity from this highs. All right, it's going to take out liquidity from this highs. So this is how to trade and also understand the movement of the markets. How the market is moving is very, very, very essential, right? How the market is moving is very, very essential. So at this point right now, I cannot call any coordinate, or I cannot call anything either for a buy or for a sell, but eventually how price is doing is price may take out liquidity from this low before having anything. Let me say if price take out liquidity from that low, you find the other block and move price to the downside. So it's very necessary. So we wait for another BOS to the downside and follow the trade. All right. Or if price give us a market structure shift, then we follow the trade. So simple as that. All right. So the third pair I'm going to analyze is going to be on GBP card. All right. So let me analyze GBP card because it's very, very also important. Let's move to the 1 day time frame. The 1 day time frame. Let's understand what the market is like saying at that spot. All right. Let's understand what the market is saying at that spot. All right, so this is GPP card. And as you can see in the higher time frame bias, the price is currently ranging and also dishing us, like it's ranging, also moving to the upside with size. All right. Now, if I could read this structure, you can see that we have what you call, let me say, engineer liquidity from here, and we have this break or structure to the upside. Price, that's an internal break or structure. Price reacted from the order block, which causes internal break or structure, all right? And uses price use this order block here as inducement, all right? So price uses order block as inducement at this spot. We also have this major break or structure, which is at the upside, all right? Which is the upside. So I want us to focus more on the structure, because if you can see, price is like teaching us, price has gave us this break or structure to the upside, although we have some internal break or structure which is here, and also we have some weak rejection break from these highs. All right, so now since we have understand the structure on what the market is currently doing in the higher time frame bias, I want us to read the current movement. So we have this break or structure to the upside. This is a break or structure to the upside. We also price, this is an order block which is price reacted from this order block. All right, so price reacted from this order block. I would love us to move to the 4 hours time frame. Let's understand what the market is doing. All right, so right now price reacted from this move order block which is here. So price reacted from that order block, but we can see we have a break or structure. We have this break or structure to the upside. We also have this break or structure to the upside. So price has reacted and this chart a move to the upside. All right, so the 2 hours time frame, price reacted from that order block, demand zone, and this shows a move to the upside. I want us to also, because we have these highs which is here, right? We have these highs. Let's look at the, let's just be looking at price in the 1 hour time frame. All right, so at the 1 hour time frame, after price reacted from that demand zone, all right, price is looking up at this point. We can also I can see something here which we have this break or structure to the upside. We have this break or structure to the upside, right? We have this break or structure to the upside. And this is the other block which causes a break or structure. Alright, so in the 45-minute time frame, we also have this other block which is currently sitting here. Let's look at 30-minute time frame. Alright, so in 30-minute time frame, we have that break or structure to the upside. I'm just refining the other block that causes the break or structure, right? So just refining the other block. Although price did reacted from this other block here, which price did reacted from this candlestick here, which is the other block. I think from the fair value gap at that spot. So price did reacted from that fair value gap. All of us move to the 15-minute time frame. All right. So me personally, I cannot see anything in this pair, but initially this is just like a key zone from this zone here, from this other block here. So actually, I don't love how the market is currently like reacting from this zone. All right, so I don't really love it. Right, so I don't really love the market's reactions. Right, so right now, price move here from this other block. We also have this zone which is here. So I'm looking for a good place for price to not react from this zone here. All right, so me, I'm going to like leave this pair, and if I could like call anything very much interesting, I'll just use here as support zone, please. Here's just going to be a key zone which I'm going to like. Here's going to be a key zone, support zone, which I'm going to work with confirmation. I'm going to use confirmation entry if I'm doing anything here, because how price is currently reacting from there is not much interested to me. It's going to be a key zone, except to have another break or structure to the upside. Price shows a nice other block with mark out the other block as a POI and move price to the upside. All right, and move price to the upside. So this is my own view pertaining to this pair. I'd rather work with confirmation entry. Just because how price is bidding here is not all. I don't really like it. All right, so I'm going to like analyze the second to last pair. I'm going to analyze second to the last pair. I'm going to use let me use GBP JPY. Let me use GBP JPY. All right, so the last pair that we are going to analyze is going to be on BTC, but this is going to be the second to last pair I'm going to analyze. All right, so I'll love us to move to the daily time frame. So in the daily time frame at the spot, we can see that price has clear liquidity to the downside. Price tapping from the daily order block, but we are still having a push to the downside. All right, so I want you to understand this, and we have this break or structure to the downside. This is a break or structure to the downside. Since that we have understand our bias, all right, I want us to move to the 4-hour time frame. So in the 4-hour time frame, I can see that price, this is a break or structure to the downside. We also have in the 4-hour time frame, we have a pure market structure shift. All right, this is a pure market structure shift, which indicates we are in a downtrend. Can you see how I find bias? All right, which indicates we are in a downtrend. Price reacted from this other block. Price reacted from that other block. All right, so price we have a market structure shift. We have a break or structure to the downside. So all right, we are looking for a sell. Now I want us to move to the 12 hours time frame. All right, so in the 12-hour time frame, I see nothing much interesting, because what price is just doing here is reactions. All right, so we have this break or structure to the downside, this little break or structure to the downside, and price is currently reacting from this key resistance zone. All right, this resistance zone in which price is currently reacting to. Allow us to move to our 1-hour time frame. So in the 1-hour time frame, price is reacting from resistance. You can see how price is bouncing up and also returning back to support. Here is our support zone. Here's our support zone. All right, here's our support zone. Allow us to move to 45-minute time frame. So in the 45-minute time frame, all right, so price reacted from this other block. for 45-minute time frame before giving us a resistance. All right, 30-minute time frame, we have this order block. All right, so in the 30-minute time frame, we have this order block in which price did not react to. All right, price just reacted from this let me say inducement OB, from this inducement OB, which is currently like 16 here. So we suppose price to react from this OB, but price did not react to this OB to give us a move to the downside. All right, so price did not react on that order block. All right, so I want us to move to our 15-minute time frame, which is the our entry time frame. So price did not also react from that OB. All right, so this is something I really want you to understand. As I said in the last pair we analyzed, I think is GBP card. All right, so we have this first touch, price move to the downside. Sorry, this first move here, price do not touch to that POI and move to the downside. All right, so we also have this touch, price do not react from this order block and move to the downside. Price reacted from this inducement order block. Price did not clear this order block as liquidity. This is something I was always emphasize in the mentorship program. I say price will always react from inducement OBs. All right. So sometimes if I'm saying it, you think that I'm just cracking some words in my head. No, I'm not doing that. All right. This is what the market is doing. All right. The market is like trying to pull you or drag you in liquidity zone. That's what the market is trying to do always. That's how the market always reacts. All right. But we cannot trade from that inducement order block. All right. We cannot trade from that inducement order block. So after that, price starts consolidating before the market close. All right. For me personally, I'll move my POI from here. I don't want it. I'm not going to use my POI at that spot again, just because how the price movement is. So price, the aggressive buy may take out liquidity to take out liquidity from here. It's going to take out liquidity from this size, right? So the aggressive buying that is going to come is going to take out liquidity. You are going to put your stop loss at that point, and you are going to beat the liquidity. You are going to beat the liquidity. So I want you guys to understand this movement. It's not about you just doing analysis and just leaving it. No, that is not how trading is. All right. Once you do your analysis, you also look at what the market is trying to say, because it's very much important. It's very much important. All right, so I'm going to like analyze the last pair, and it's going to be BTC. All right, so then also analyze the current market, which is currently open. It's going to be BTC. All right, so this is BTC, and this is the 15-minute time frame. I would love us to move to our daily time frame. Let's understand the order flow of the market. Let's understand the order flow of the market. All right, so this is the order flow of the market, which is currently like bearish. So the market is currently like bearish at this point. And if you can see, we have this break of structure. This is the major break of structure to the downside. All right, we have understand the bias of the market. This is a major break of structure to the downside at this spot. So right now, price is currently reacting from this side. Price is reacting from this side. Let's move to our forward time frame. That's what price is currently reacting to. All right. So as I say, price is reacting from this zone. But actually, if we could see something very nice, we have this break of structure, this major break of structure to the downside from here. We also have another break of structure to the downside though. So we have this break of structure to the downside from here. All right, so price is currently like reacting, using here as what? Price is using here as resistance. All right, price is using here as resistance zone. All right, so but if we can also see we have this break or structure to the outside, which me personally, it feels more of inducement level. All right. For you to do anything, you need price to break above these highs. If price will break above these highs, you may have opportunity to look for a little buy and take out profit immediately. But price not break above that highs, and price is just dragging you to liquidity. All right. So I know that people will be, don't forget that the order flow of this market is bearish. Is bearish. All right. And people will be looking for a buyer at this spot before you know they got liquidated in the market. So I want us to move to the 2 hours time frame. In the 2 hour time frame, as I say, here is key resistance zone. All right, and we have this break or structure to the upside. We swept at liquidity. It's not a point for you to take a trade, but if we could read the internal structures which price is currently like giving, we have this break or structure. We also have this break or structure. We also have this break or structure. All right, looking for a buy here is very risky. I'm not going to lie. Looking for a buy here is very risky because we have understand the order flow of the market is bearish. Now, once you're looking for a buy, it means like you are going against the trend. You are going against the trend, all right? Because I know people are placing order here to look for a buy here, but you are going against the trend. The buy is under probabilities, not high probabilities, under probability. So I'll love us to move to the 1 hour time frame. So in 1 hour time frame, as I say, we also have this break or structure, and price is currently reacting from this resistance zone. All right, this is a resistance zone. This is a resistance zone from here. Right, price is currently reacting from that zone. Now I want us to look at 45-minute time frame. Our price indeed reacted from a demand zone, which is here. The reaction from that demand zone is here. All right, the reaction from this movement here is in this demand zone, which is here. That is where the reaction is currently like coming through. All right, understand this. Price is not moving to the bullish side, please. I want us to move to the 30-minute time frame. All right, this is also a reaction. We having this break or structure to the upside, having this another break or structure to the upside, and price is reacting from a supply zone, which make us to have this. All right, now since price is reacting from this supply zone, I also want us to look at something. It is very much important. All right, so we have this movement, right? We also have this movement which serve as break structure to the upside, or let me say market structure shift to the downside. So this is where we find something interesting. So we have this other block which is currently like sitting here. All right, so we have this other block. Let's move to 30-minute time frame. All right, so in the 30-minute time frame, we have this other block which is here. In 30-minute time frame. All right, this is our block which is here. Our block in the 30-minute time frame, we have a market structure shift to the downside after in which price has reacted from a supply zone. All right, so I'm seeing something which is very much interesting, although we have, if you can read this structure very well, we have this other block which is sitting here. Right, this means that this other block which is here is going to be in form of liquidity. I mean this block here, because I'm seeing that other block at that side in which price do not mitigate. All right, price do not mitigate that zone. Price do not mitigate that other block at that spot, which is very valid. Something also interesting which is here, we are also having some stumbling block here, which is going to serve as inducement OB. All right, but I'm not going to say price can react from here. If you can read this market structure very well, we also have some break of structure to the downside. We also have this break, a little break of structure to the downside. But I want you to also check something. We have a supply zone which is here. All right, so I cannot be comfortable in taking a trade from this supplies block, this from here, like take a trade from here and move it to the other side. Right, so it's unless you want to risk, unless you want to risk it, unless you want to risk it. But me, I'll be more comfortable. I'll be more comfortable to take trade from this other block. Right now we are having like two POI, two premium pricing arrays. This other block at this side and this other block at this side. So let's use this other block here. So here we serve as liquidity. Right, let's use this other block here. We serve as liquidity. Here we serve as liquidity. Let's use this other block here, which is sitting here. So price will not negate the other block. Then our order. So this is going to our POI. We'll move it to the downside. Right, this is going to be our POI. If we can have a retracement, then I think our stop loss is 438.33. If we can have that movement, we need that push to the upside, and this trade is 4 risk reward ratio. All right, so we need the market to return back, clear liquidity from here, tap us from here, and dish us a sell after the market structure shift has been confirmed. All right, and give us a sell to the downside. So this is my own view on BTC. So if you want to take this trade, you can take the trade, but apply proper risk management, please. Apply proper risk management, please. All right, so I cannot look for a buy. So the trend is bearish. Let's follow the trend. Let's follow the trend. It's very much necessary. So we need price to return back here. We need price to return back and give us a sell to the downside. All right, to give us a sell to the downside. So we have this first premium pricing array. We have the second premium pricing array, and we have the third premium pricing array. Let me just mark it out. All right, so at my POI right now is the first premium pricing array. All right, so here which I use as liquidity is the second premium pricing array, and the movement here, this here is the third premium pricing array. So it's there for us to take trade from which one. For me, I will consider the first premium pricing array, which I use as my POI. So I really need price to return back to there to give me a sell to the downside. But if price does not return back to there, I will be fine with the market. All right, I will be fine with the movement.